sadly, our political system really kind of drives agenda and really drives where some of these, where the macro does go in the equity markets, in the equity capital markets, and in the bond markets. Now we're going into primaries in the U.S. We're going into a presidential election, and my view is quite simple. Even though we have a recession looming, and we probably are in a recession in North America and in other parts of the world, I think what the U.S. is going to end up doing is going to end up printing their way, as they have in the past, out of a recession. They are going to temper interest rates. We've already seen the next rise going to be 50 basis points versus the first six being 75. We're going to see a tempering of interest rates, and possibly, that could be it for interest rate hikes. We will see inflation come down, but we're going to see it come down artificially. The U.S. is going to pump money into the system because there's no way the Democrats can go into a primary war with Republicans and Donald Trump at the helm and win that election if we're in a recession. There's just simply no way. So my view is the dollar is going to weaken next year, and I think we're going to set up for a very, very strong, I'm not going to call a gold run, but I'm going to say a very, very strong gold price environment, kind of like $100 to $2,000 for the next year, possibly two, as we get into an election, and then beyond that, we'll see after the election.
Yeah, and it's interesting because we've actually been seeing some of the mainstream banks now start to talk about gold, which is not traditionally the type of thing that happens in our financial environment, but Goldman, JP Morgan, Bank of America recently put out their top 10 trades of 2023. They were talking about gold. Do you think this could be the point where we finally get some more mainstream interest entering the market?
Yeah, I think so. And again, with the dollar weakening, and QE around the corner, we're already seeing central banks buying gold, and at levels that are greater than they historically have. And I think that is going to also put pressure on the gold price to remain strong, because I think we're going to see many of the central banks continue to consume higher levels and buy higher levels of physical than they historically have.
Yeah, you're quite right about that. We saw record central bank gold buying. Another a couple days ago, they released the October figures, saw additional central bank buying. What do you think is behind that? Is it just that some of these countries are finally starting to realize what a lot of the people in the gold and silver community have noticed for the past couple decades, and just seeing that there might be some problems going forward here, even despite what we've seen from the Fed this year? Or what do you think is driving that change in sentiment?
I think we go back to fundamentals back, many, many, many years. And that is, gold has always been an insurance policy to unrest. And we're seeing significant financial system unrest, significant political unrest, and we're seeing the most volatile equity capital markets we've seen in history for a number of other reasons as well. So I think when we see this unrest, and I believe in our generation, we are going to see a currency reform. And I think the mainstay out of all of that will be physical gold. It will not be synthetic gold. It will not be ETFs. It will be holding physical product. I think that is going to be where I think countries, where investors are going to find comfort, and they're going to find yield.
Well, we saw a bit of that earlier this year when Russia had that temporary backing to the ruble. And interesting to see just this de-dollarization trend, which has been going on for a while, but especially this year when you see Saudi Arabia talking about joining the BRICS. I mean, a lot of things that, you go back 10 or 20 years ago and had suggested something like that, it would have seemed like conspiracy theory. Yet we're really seeing countries and notable countries actually talk about these things openly, which makes you think that we might be headed towards some sort of reform there.
I think so. It's almost like they're is a moral revolution going on in certain parts of the world. There's a moral revolution going on in the U.S., translating into kind of a social and political revolution. Look at what's happening. Even look at our backyard in the U.S. Look at what is going on in the U.S. and all the polarization that goes on. That just transmits all over the world into escapism and and volatility in the markets, and everything is on trades on headlines these days. So I think the whole reform of currency, the whole reform of the financial policies around the world they just simply need to be reformed, and that's why I think gold is going to be the safe haven while this goes on. And it's not the U.S. simply can't continue to spend $4 trillion a year and service $32.5 trillion of debt, increasing by $1 trillion to $3 trillion a year, depending on fiscal policy. They simply can't service it. So the U.S. dollar is going to get weak, and gold will have its day for a long time. We're setting up for a long gold and silver run for some time to come.
Well, those are the issues that the White House and some of our other politicians don't often seem to talk much about. And, we've seen that sell-off in the bond market to some degree, although perhaps not a mass exodus, even though we see a lot of the traditional buyers, China and Japan, pulling away from the treasury markets. Now the Federal Reserve doing their quantitative tightening. Do you see that eventually shifting where people stop looking at the treasury as the safe haven and go to gold? I mean, is there some sort of break point that we eventually hit there that specifically comes from the treasury market, which, you're still getting a negative real return on your treasuries, yet hasn't fazed Wall Street so much? Do you think we eventually get that break coming from the treasuries?
We could, because again, negative real rates of return aren't sustainable over the long run either. And what is going to create that inversion to kind of normal, I'll say, investment yields, normal investment products, yielding on a more normalized platform. I don't know when that's going to happen. I don't know when that reform is going to occur, but it has to. It's like we're standing in the middle of a train station, and there's 5 tracks are all around us, and all trains are coming towards us, and there's going to be a big train wreck. There really is. And the speed at which the trains are coming at us are the fiscal policies of the major 5 countries in the world, and that's just the reality. Some need to slow down and stop, and they can't. So I think we're headed for a period of time when this volatility and these types of crises in financial systems are going to continue. Do you remember the PIGS, the Portugal, Italy, Greece, and syndrome, and Spain? We're headed for more of that. We're headed for more country disruption and bankruptcy. These countries can't continue to spend more money than they actually bring in, and the U.S. is one of them.